US crude WTI has closed the year 2022 at above 80 levels and with the modest gain. This was the closing at 31st December 2021 when it closed at above 75. So this is just a modest gain with which it has closed the year 2022. But what a roller coaster ride. It has seen the highs at around close to 130 levels and seen a good drop since then and again back to square one. But at the same time, look at the MACD. The MACD has crossed over on the monthly chart. This is divergent, this is bearish, and this is happening at a high. This is happening at a higher levels. You can see when this happened last time in 2009 when was the financial crisis, and that time oil has taken a sharp plunge, and see this was the divergence. It has achieved the bottom close to $40 levels. Likewise this time too it has taken a crossover here, but the slope is not so steep, and but yet it is still divergent, it is still bearish. So in 2023, are we going to take or see a sharp plunge in US crude WTI, or is it going to bounce back? What should be our stand? Which position you should take in the next month, and what can be expected out of the year 2023? We will see with the help of charts and indicators. Do not forget to like, share, subscribe, and comment. Do not forget to press the bell icon, which will keep you updated with the daily analysis and targets for crude oil, which I share very early in the day with the Asia session. So do watch that, do press the bell icon. Let's start. Now look at the charts. This is a monthly charts for oil, and you can find out that, see, this was the bottom here at $60 since it has seen higher lows at the same time higher highs on the monthly charts, and this is an expanding triangle. This is still confirming the bullishness inherent in the crude oil WTI. Also, $60 levels are now the baseline at which it is getting very important and strong support. So first $70 levels and then $60 levels, only below which you can expect that it is going to crash heavily. This is one part of it on the monthly charts. Now also on the monthly charts you can see lower highs, lower lows. The bottom of this right now situated at around 65, which is also a very good support, and then 60. So yes, it has closed the month at around 80, in fact 80.5, which is also a sign of a doji indecision that the previous month close and this month close are almost at the same levels. But this is also a sign of a reversal from here, which indicates that there could be a potential reversal achieving these levels. It can retrace a little before it looks forward to downside. So this is on the monthly charts. We will have a further look here on the weekly charts, what can be expected in next few weeks. Now look at the weekly charts. If you look at the weekly charts, see, this is the bottom is being achieved of this trend line, and you can find out that this is the highs which oil has seen, and if you connect this is again an expanding triangle. Now achieve the bottom and it is trying to retrace. That is very important. It is precisely bounced back from the same levels of what we had seen previously, the lows here. So first, second, third, and fourth time it is trying to retrace from here. So is it going to achieve higher highs? Let's have a further detailed look. Look at the weekly charts here. We had seen multiple times that 92 levels, 93 levels are provided it a very strong support, and till 100 levels it has got very strong support. See, sharp drop, then the slope has suddenly changed, and now still it is looking downward. So see, first thing is achieve the highs, then this sharp plunge, then phase of consolidation, and then this plunge out there. So this is still in the bearish trend right now. Yes, it has taken a support at 70. I will look forward for it to break past 84 85 zone. If you see oil trading above 84 85 zone in next few weeks, probably you can expect that we are looking at 90 92, and in fact it can retrace further till towards 100 and above levels. So yes, there is a retracement which is yet to be expected. Is it going to achieve higher highs? That is something which we need to see. We will see further into detail here. On the weekly chart, it appears it has seen the base and probably it may try to retrace a bit. For the next week, specifically talking about next week, if you see it trading above this zone at 81, you can buy here. Yes, if you see it trading above 81, you can buy, but then expect 83 and then 85 levels. If it trades above 85, you can expect that definitely we are looking forward to 92 levels again. So for the next week and in the month of January, if you see it trading above 81, you can buy, but see, the nearest resistance is at 83, and then till 85 it has got major resistance, because beyond 85 it is definitely, it may try to attempt and achieve 92 levels. Now why these levels can be achieved? See, it can form a symmetry if it breaks past this zone on the candles. First thing is, at 85 it should get major resistance. If it breaks past this, then it can achieve a symmetrical candle in green, targeting 92 levels. There is a possibility for it. So be careful and cautious in the month of January for with the shorts. At the same time, trading below 79.2, you can expect that there is going to be a little more pullback on the downside, which might take it below 70, and then a closing above 70 is possible. So these are the two aspects, that is below 79 and above 81. For these $2 we have to remain watchful for the next week, and for the month of January till 85 levels you have to remain cautious, because see, till 85 it can give you this type of formation, that is higher highs and higher lows. So be careful, only above 85 it will try to show the real strength there. Now let's have a look at the daily. Now see, on the daily charts it is still trading in this bullish channel. But if you look at the channel highs, it has shown the reversal, and it has shown a reversal here. So see, rise, retracement, rise, retracement, now again trying to rise here. And that is what it makes 83 first resistance, and then 84, 85 till 85 it has got very strong resistance. I will be definitely watchful of this. On the downside, now you can clearly see 77 levels are definitely going to provide a support. So in fact, if it trades below 79, you can expect 78, 77 as the major support, only below which you can expect little more drop. Now, interestingly, if you look at this double bottom at the previous support line, and since then this retracement, possibility for it to continue with the bullish momentum, exist very strong till 85 levels, there is a possibility for it to rise. Now see, after the deep plunge there, it is broadly trading in this zone, and here also you can see certainly the highs of this channel are situated at around $85 level. So yes, first thing is buy above 81, expect 82.8, 83 levels, 83.5, then 85 levels to provide maximum resistance for crude oil WTI here, possibly achieving this zone, possibly achieving the highs here. We will see how it behaves, because beyond that, certainly I will be looking forward for 90 and 92.5. And on the daily charts, if you look at, higher lows are seen, higher highs are seen. Yes, you have to be watchful of 78, 77 zone, because below which little more bearishness might be seen. Now we have seen the charts, you've seen the, let's have a look at the indicator. Now, interestingly, on the daily charts, you can see that the 20, 50 and 100 period moving average are trading with a divergence, and you can also see the 20 period moving average is now trying to curve upwards. So there is a possibility, there is a probability that we may see little more bullishness in oil, which might try to take it till towards 92 levels, and in fact it can attempt and achieve further highs till towards 100 levels in the near future. There is one probability to it, but this should be only considered a retracement, not a bull run here. So this is one part to it. Next few weeks are going to be important, specifically the first quarter is definitely going to be important, as it is trying to curve upwards, possibility for it to trade bullish from here exists. Now look at the oscillator here on the daily chart. This is after trading for a while on the sell side. On the negative side, it is crossed over on the bullish zone, and see, throughout 2022, this is the first half when it was trading bullish, this is the second half when it was trading bearish. Definitely I'll expect, if it breaks past this high, certainly you can expect that the bullishness on the oil has returned. But this is just on the daily charts, we'll come back to it in detail. See, the stochastic was overbought, it has dropped a bit. The MACD was at bottom. Now see, achieving the bottom, it has seen a rise, but it appears here is still the divergence. See, it has seen the drop here, now again trying to diverge. So if it continues with the divergence, there is a possibility, because see, so far it has traded on the downside, it is looking forward to upside. It can bring a very strong bullish momentum, might take it till towards this zone, which is indicative that oil still has a rise, it is still has a potential for it to take or rise a bit. At least 20% potential on the upside is what I can foresee in the next one quarter, and beyond those levels, at that point we will decide. So 20% from here is almost $9,800 levels. There is a potential for it to achieve those levels, and at those levels we will decide which direction it takes. It is going to be important, the $100 levels for oil here. RSI is also trying to look upwards. There is still a potential for it to rise. Now let's have a look at the weekly charts here. On the weekly chart, the 20 and 50 period moving average is already crossed over. The 100 period moving average is looking forward to cross over. This is a bearish cross. This is bringing bearishness in oil, and hence till this zone you have to remain cautious. In fact, till 100 levels you need to remain cautious there. Now look at the oscillator. It was trading bullish on the first half. The second half it is trying to trade bearish, but the hump you can see the top is done. It is looking forward to converge here. Possibility for it to trade bullish from here exists. The stochastic, which was oversold, now trying to rise, and possibility exists that it can continue with this bullish momentum. It is trying to complete the journey here, at least lower highs. Hence, couple or more weeks of bullishness can be expected. Now, look at the MACD on the weekly chart. This is also achieved the bottom. This is converging here. This time it may cross over. This time it can again try to potentially take it at highs. There is a possibility achieving somewhere in between. It can again try to take a dip. So that is what the confirmation for us that yes, first quarter or second quarter of next year can bring little bullishness. There is a possibility 20% upside from here is possible. $100 levels are achievable, and in fact 100 zone we will see how it behaves at those levels, because from there in H2 there is a possibility for a drop again. See, the RSI on the weekly charts has also achieved double bottom, now trying to look upwards here. Now let's have a look at the monthly chart. This is going to be now on the monthly charts, almost the divergence has flattened here. So possibility exists that it can try to trade sideways or show you a little swing or little rise before it tries to take a dip. Look at the oscillator there. See the journey till here. The highs here was almost 1.5 years. 6 months are done on the sell side. Now it is looking forward to cross. So first possibly next few months we need to be observant and watchful. And yes, it can trade sideways or trade bullish. That is one probability. It can trade achieve the highs before it looks forward to a drop. Yes, but a drop is certain in next few months. Now why there could be a rise in the first quarter? See this on the stochastic on the monthly chart. This is oversold. This is oversold. It means that there is a probability for it to give a rise, and this confirms our stand and our analysis that Q1 and Q2 year 2023 may see a rise in oil, and possibility for a 2025 in fact 30% rise also exists in next 3 to 6 months. And hence wherever you see, possibly we may see oil trading bullish from here, achieving 100 zone before it looks forward to a drop here. So this is very important on the monthly charts. But at the same time, look at the divergence here on the MACD. Now MACD has taken a crossover at the highs at plus 1000 levels, and this is trading with divergence. So now interestingly, yes, it may try to converge a bit, trade like this, and then from there, that is 3 to 6 months from now, it can again start to diverge and take a plunge. The plunge is certain, but it is good if you sell it at a highs at around 3 to 6 months from now at around 110 zone. If you see it trading at those levels, possibly from those levels you should take a drop. See, there is going to be a sharp plunge from here, but possibility for next 3 months or 2 months or 6 months, yes, there is a possibility of a rise also. So first half a rise, second half of the year we can see a crash again, and hence you need to remain cautious. RSI is also looking downwards here. It can stabilize a bit here or try to rise and then a sharp drop. But specifically, now we have seen the analysis here for the entire year, but specifically for next week, yes, if you see it trading above 81.2, you can buy, expect 83, 83.5 and then 85 levels as the maximum resistance zone. And if you see it trading above 85, you can expect 88, 90 and 92.5 levels again. This is possible for next few weeks, and yes, beyond 92. Then the month of February you can still stay long for 98 levels, and beyond that also are possible, but at the same time you should remain cautious at those levels. For next week specifically, if you see it trading below 79.2, you can sell and expect 78, 77 and 76.5 as the maximum support zone. Below that 75 is seen, and then 72, 70 levels can be expected, below which again a sharper drop might take it below 70 levels. Now if you see trading on the downside on the sell side next week and for the month of January, probability exists that we may see the bears running the scene there, and probability exists that if it trades below 70, more drop can be expected till towards 65, 60 in the first month itself. So this could take a reverse indication. Yes, oil has to drop, but for me, first it has to rise a bit before it takes a drop. So take your trades accordingly. Trade with the stop loss. Trade with the trailing stop loss. Do not forget to like, share, subscribe, and comment. Do watch the daily analysis. Do join my mentorship batch. The next monthly analysis, the next daily analysis, or the next batch, 18th batch is going to start on 9th of January. Be a part of it. Do not miss this opportunity. Equip yourself with the right tools and techniques so that you can become a profitable and proficient trader. Reach out to me. My Telegram and email IDs are mentioned in the channel and video description. Thank you.